Hello everybody, in this video I'm going to be doing a brief stock analysis on Walmart and give a general outlook on the company moving forward. And if you do enjoy this video, please do come check out my channel as I do a lot of videos very similar to this one. Walmart is actually at about $115 right now per share, and it's up about 50% right now in the last 5 years. And that's actually extremely good when you compare it to other retailers, and it's also really good when you consider how big Walmart is throughout the world. And then I was actually really surprised when I saw this. They're up 30% in just the last year. So we saw that they were up 50% in the last 5 years, and 30% of that comes from the last year. And I'm actually really surprised because they're beating earnings. They're doing a lot of expanding, but I really don't know if they've done this amount of growth. 30% in the last 5 years is really unexpected for how big Walmart already is. And if you don't know how big Walmart is, if you were to consider Walmart as a country and consider their revenues as tax revenues, they would be the 12th biggest economy in the world. And this is actually really crazy, especially considering that Amazon only has about $220 billion of revenue, while Walmart has over $500 billion now. So a lot bigger than a lot of people know. And another thing I wanted to just note real quick is that revenues and earnings have been pretty steady for the last 4 years. If you go back about 10 to 12 years, you would see how much they're increasing from year to year as they were still rapidly expanding. Walmart is at a $328 billion market cap, making it a Dow 30 company, and I think it's going to remain a Dow 30 company for a long time. I don't think Amazon is really going to be able to take away much from Walmart's business model just because they do deal mostly in groceries, whereas Amazon really hasn't not gotten much into that space yet. So I do think that market cap will continue to increase, but it's going to increase much slower, kind of how we've seen in the last 4 years. The revenues are just going to slightly increase as they have because they're not really able to increase revenues per store by very much as we have seen. And then the 1 year target estimate, they've actually beat that. They're currently at $115 as we saw. So if you were thinking about investing in Walmart, you probably do want to hold off for a little bit until that price does come down. And then lastly, they are at about a 2% dividend yield, and I do think that will start to increase year over year, especially as that price comes down a little bit. Then it'll be about 3%, but I think they're going to continue to increase it year over year as their growth continues to slow. Next up, I wanted to take a look at a couple of points that an analyst at Morningstar made that gave Walmart a buy rating. The first one is that Walmart boasts purchasing leverage that allows it to minimize procurement costs and keep its prices low and traffic high. So they're able to get the land for the Walmart stores for very cheap. The towns really want the Walmart stores because it brings a lot of jobs to the different towns. Actually, in a lot of cases, Walmart is the #1 provider of jobs in a lot of small towns. So towns really want Walmart to move them in, and they'll do anything that they can to help them out financially to get them in those towns. And then the last point that I wanted to talk about is that the Flipkart acquisition should help accelerate Walmart's digital transformation by improving its global e-commerce presence. So if you didn't know, they acquired Flipkart, and Flipkart started out in India as an online sales company. So this should definitely help Walmart with the online side of things, and especially help them in the Asian markets where they're having a little bit of trouble growing. And then I also wanted to take a look at a few points made by an analyst at Morningstar who gave Walmart a sell rating. And then the first point is that competition is fierce throughout retail, and Walmart will have to innovate to keep pace not only with Amazon, but also physical retailers that are increasingly investing in multi-channel capabilities. I think Walmart is definitely doing a lot to innovate with what they've done with increasing the amount of self-checkout aisles to decrease costs, as well as changing store layouts. And then they've also recently done where you can pick up your groceries for just $5. I think that's probably making them a ton of money because so many people don't like going into the grocery store and spending a couple hours getting groceries. So they're definitely getting a lot of money by doing that and getting a lot more traffic coming to their stores. But as far as keeping pace with Amazon, I really don't know if they really stand a chance to innovate as fast as Amazon has been able to do so. And then I also just wanted to mention this third point, that Sam's Club continues to lag well behind Costco in sales. And if you didn't know, Sam's Club and Costco are direct competitors, and Sam's Club is owned by Walmart. So Sam's Club is definitely having a lot of trouble, but they're still highly profitable for Walmart. They're definitely not going to cause any major problems for Walmart. They're just not doing nearly as well as their main competitor. Another thing I definitely needed to mention is that Walmart is doing a lot to expand internationally. They acquired Corner Shop in Chile and Mexico just a couple of years ago, so it's definitely going to help them expand in those countries. And Walmart actually has about 2,000 physical retail stores in Mexico, which is about half as many in the US, and I thought that was actually a really surprising number. And then they've also acquired some stores in Canada and Argentina as well. They just don't have nearly as many stores open. And they're also expanding in Europe and Asia, but they're having a little bit more trouble expanding in those retail markets just because there are already so many retailers in place already. And then here's just a chart kind of showing that. Sorry, this is a couple of years old. This is from 2017. I believe they have almost 12,000 stores open worldwide now. But as you can see, there's about 4,500 stores open in the US and 2,000 in Mexico. And then they're trying to do a lot to expand in all of the markets throughout the world. They're probably going to be able to do a lot in Central America and South America, but it really remains to be seen how well they can expand in Asia. And I think that's really going to determine how well they do successfully financially with their growth in the years to come. With all of that being said, I do think there were probably some better investments out there. 50% in the last 5 years and then 30% in the last year for the growth on your investment is definitely impressive, especially when you're getting a dividend, but I don't think that growth will continue. So I do think there are some better investments out there. Come check out my channel if you want to come check out some other recommendations I have on stocks, and subscribe for more content. Thank you so much for watching.